Hello, I'm Laurie Mulch again, a volunteer with the Funder Plus program at the Community Foundation for Surrey. This is video 3 in our series on charity accounting. And in videos 1 and 2, we spoke about the 5 steps to produce compliant accounts in accordance with the Statement of Recommended Practice, SORP, SORP, applicable for 2026, which will come into play from the 1st of January 2026. So those 5 steps are to produce compliant accounts are to set up a chart of accounts, to allocate the financial transactions to the categories in the chart of accounts, to make sure we keep separate unrestricted and restricted fund transactions, to produce the statement of financial activities, and to prepare the financial part of the Charity Commission report. So we covered most of that in videos 1 and 2. And now what we need to do is really drill down into the practical implications, what this looks like in a spreadsheet. So just again, a summary of the practical steps involved. What we need to do is transfer transactions from your bank account into a spreadsheet. We've typically used Excel. We need to create a chart of accounts as described in earlier videos, coding income according to grants, for example, LOT for lottery funds, and unrestricted donations, for example, DONU. If you have a village centre, then you'll want to be specific about the type of trading income, and you could use hall for hall receipts. We need to separate charity activities, for example, a yoga club, generally funded from restricted grants, from core governance expenses, for example, INS for insurance, using typically, but not always, unrestricted funds. Any income requires a unique single code. So if you've got some income from the lottery and you've chosen LOT in your chart of accounts, you're going to allocate that particular bank transaction with the code LOT. Here's a really important point. Any expenditure requires 2 codes. The nature of the expenditure, and secondly, which fund to charge it to. Because otherwise the model, of course, the model needs to be able to collate, to gather, to cluster the expenses, let's say, on petrol, on vehicle expenses. You'll want to cluster those, gather them together, add them all up. But also, if you've got a grant from the CFS, then we want to see how much of that CFS grant has been used. That's why we need 2 codes for expenses. So in Excel, using the chart of accounts, you need to prepare a table of funds versus expenditure, clearly separating restricted from unrestricted activities. And you need to closely monitor each category of funds to ensure none are overspent. And unrestricted funds are incredibly valuable because you'll need to transfer unrestricted funds to any overspent restricted activities or funds. Now here's a very, very simple spreadsheet where we're going to address charitable activities in particular. So here in green, we've got our unrestricted funds, and in red, we've got restricted funds. And here, the restricted funds have come from three sources, some from the lottery, some from the Community Foundation from Surrey, and some from the NHS. I spoke in earlier videos about the importance of bringing forward any funds left over from the prior year accounts. And in this case, we've got 1,350 left over from the prior year. The receipts in this year have been 1,250, giving us a total at the moment of 2,600. This is what our model produces for us if you build an Excel model along these designs. And the similar approach is taking place with the lottery, CFS, and the NHS. We've got prior year brought forward funds or carried forward funds there. We've got receipts, which have come from your coded bank statements, and all the way along here. And we've incurred expenses. Similarly, your bank statements that have been coded with the relevant expense code all the way along here to be charged. As I've indicated, any expense needs two codes so that we can separate out what type of expense it is and which code it goes under. Now, here's some examples down here. So we've had the yoga club, and the yoga club is funded by the lottery, and so far £2,200 has been spent in the year to date. And also against the lottery account or fund, we've been running a teens club, and we've spent £200 on that, giving us a total of £2,400. Take that away from the brought forward and the receipts, and we've got a carry forward at this point in time of 1,150. And the same applies for all of this. In the case of mental health, you've had a grant from the Community Foundation for Surrey, but also from the NHS. And on some basis, you've split that between the CFS and the NHS. Now, I've not filled in here, I've indicated typical nature of utilities, salaries, insurance, and the total, but I've not allocated them here because this is the subject of some other videos that we've got, and we do recommend that you watch those. The Statement of Financial Activities is a key document providing an analysis of income, expenditure, and fund application, usually over a 12-month accounting period. And the SOFA shows the movement and balance of restricted and unrestricted funds. In other words, the split between income and expenses into R and U categories, and any transfers from U to R if a restricted fund activity has been overspent. And we covered that in an earlier video. The SOFA is included in the annual report to the Charity Commission and to Companies House for those companies formed as companies, for those charities formed as companies limited by guarantee. A very useful note is that the Charity Commission provides an Excel template for reporting the SOFA, and this can be integrated into your own Excel model and thus automatically updated for new transactions. So here's an example of the SOFA, which comes from the latest version of the Statement of Recommended Practice, and it's on page 63. It's a little more detailed than you will probably need, but it gives you an indication of unrestricted funds and how they've been spent, the, the funds that have come in, and then how they've been spent. The same thing with restricted income and endowment funds, etc., just as we illustrated in that earlier miniature Excel spreadsheet. Now, the financial report to the Charities Commission is a narrative on the charity's objectives, achievements, and governance over the reporting period. It contains key financial information from the SOFA and the balance sheet. It gives assurances of public benefit activities and financial transparency. And the trustees' narrative and financial report provide evidence of the charity's impact and its compliance. So this concludes our three-part video on charity accounting. And to provide more detailed information, the Community Foundation for Surrey has produced an easy-to-follow guide to charity accounts. And if you'd like a copy or you'd like some information on how we might support you, then please get hold of us at funderplus@cfsurrey.org.uk. But in the first instance, I would remind you, it's always a good idea to contact your local voluntary action group first, because there's some fine people there and they may well be able to assist you. As I've mentioned before, we would welcome your feedback on this video, and there's a form that you can fill in there. If you'd like more information about FunderPlus, do look us up on the website. And as I mentioned a moment ago, if you'd like some support from FunderPlus, do contact us at that email address. Do look at some of our other videos. I do hope you found these useful, but have a look at the other videos and they may help as well. Goodbye for now.